Hi, this is Sean Broderick, editor of Red Hot Global Small Caps and Red Hot Commodity ETFs. Gold is coming to a major inflection point that will give investors two ways to buy, either in the gold ETF for a big move higher, or an opportunity coming up to pick American Gold Eagles on the cheap. Let's look at a chart of gold as measured by the Spider Gold Trust, also known as the GLD. This daily chart shows that gold as measured by the GLD has been in an intermediate-term uptrend since November, but it peaked out last month and went into a short-term downtrend. The GLD is now below its 20-day moving average, which is a quick and dirty dividing line you can use to tell if something is in an uptrend or a downtrend. If the GLD bounces higher from this inflection point and goes up to break the short-term downtrend, great. You can buy the GLD and other funds leverage to the price of gold to ride that move higher. But if the GLD breaks the uptrend, you'll have an even more interesting chance to buy gold on the cheap for yourself in the form of coins. Why is that? First, I have to give you some background. Last week, the United States Mint officially suspended another slate of gold and silver products. The Mint is suspending its 2009 American Gold Eagles and its 2009 American Silver Eagles, which the ones that are just made for collectors. Now, these are the collectible versions, but they represent a sizable amount of the precious metal sales of the Mint. The Mint is still making strictly gold bullion coins, but quantities are limited. And no wonder. The U.S. Mint sold 4 times as many American Gold Eagle coins in this past January as it did in the same month a year earlier. This is just following the trend established last year, when the United States Mint said its sales of the American Gold Eagle bullion coins went to 710,000 ounces from 140,000 ounces the year before. And it's not just in the U.S. Up in Canada, the Royal Canadian Mint, the one that makes the maple leaf bullion coins, quadrupled its production capacity late last year because demand for gold and silver bullion coins are off the charts. And this brings us to the opportunity. Well, it looks like stocks, as measured by the major indices, could rally for a bit here. And that means investors will be taking money out of the safety assets, the U.S. dollar and precious metals, and shifting that to the riskier assets and stocks. Recently, we saw the holdings of the world's largest gold-backed exchange-traded fund, the GLD, hit a record 1,056 metric tons. That happened on March 15th. That's more than the gold held by the Swiss government in this one fund alone. And the other ETFs around the world are also adding to their gold holdings. Take a look at this one-year chart. This chart from sharelinks.com shows that the rise in ETF holdings of gold has been extraordinary in just 1 year, from 38 million ounces of gold to nearly 60 million ounces of gold. If I showed you a 5-year chart, that climb is enormous. So how does this translate into an opportunity to buy gold? Well, you have to remember that a big chunk of the money in gold-based ETFs is speculative money. Investors are using the funds to rise the ride in gold prices because not much else is working. If gold and the GLD break their uptrends, their short-term uptrends, we'll probably see the speculators sell their holdings in the GLD. And that should drive down the price of gold rather quickly. That, in turn, should make the price of American Gold Eagles cheaper, those that are on the market. So if you've been looking for an opportunity to pick up American Gold Eagle coins on the cheap, this could be your best chance in months. And it could be your best chance for years to come. So, would a break of the uptrend in gold prices worry me? Not much. Take a look at this monthly chart of gold prices. I can draw any number of uptrends on this monthly chart. You can see that gold has a long way to go before testing its longer-term uptrends. So, a pullback is fine, a normal and necessary part of any bull market. If we get a deeper pullback in gold, which I think could happen, that will be our opportunity to buy gold eagle bullion coins on the cheap. If gold bounces and heads higher from here, then we can pile into the gold ETFs. Either way, you can win. Subscribers to my Red Hot Commodity ETF services are out of gold for now, but we'll jump in on a breakout up or down. Thanks for listening. This is Sean Broderick. Have a great weekend.